Hi, I'm Mike Capizzola from the Investing Channel, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're going to be looking at the education and training sector. This is a significant marketplace and one that's likely to grow in size as businesses try to raise the skills and productivity of their staff. In 2017, U.S. employers spent a total of $516 billion, including wages, on training and education, according to a 2021 report from Credential Engine, the DC-based not-for-profit dedicated to creating a transparent and open access landscape for training and educational opportunities. According to their data for larger employers, that works out to a spend per learner of between $399 and $941 per head per annum. However, those costs rise for smaller employers who don't enjoy the same economies of scale and come in around $1,880 per learner per annum. The total spend on training and education among companies with less than 100 employees during 2017 was some $34.20 billion. Companies with between 20 and 99 workers employed 21.35 million staff in the period when the research was conducted. Though in-house person-to-person training remains popular and is considered by many to be the most effective form of training, the online education and training environment is steadily growing and has received a boost from the pandemic. Analysts estimate that the e-learning market will grow to be worth $325 billion by 2025, and in the 2017 survey, 98% of U.S. employers expressed a desire to have incorporated online learning into their training programs by the end of 2020. What's more, there seems to be benefits for both employers and staff, with e-learning thought to dramatically increase staff retention rates, productivity, and profit margins. For example, IBM is believed to have saved some $200 million when it switched to e-learning. There are further opportunities for growth available in the sector through the technologies of augmented and virtual reality. These will become more apparent as high-speed 5G networks roll out across the country over the next few years. Against that background, it should come as no surprise that one of the best performing stocks in the pink sheet and OTC markets over the year to date has been a training and education provider, Probility Media. The Florida-based company offers education via online and in-person programs, including training in a variety of vocational industries, and it's hoping to disrupt the marketplace by offering high-quality training courses and materials to, in its words, prepare the workforce for excellence. The business has three divisions: One Exam Prep LLC, the North American Crane Bureau, and Disco Learning Media. Probility Media had been delinquent with its reporting obligations to OTC markets, but has recently brought itself up to date in that regard. In early August, the North American Crane Bureau announced new training contracts with two NYSE-listed companies, namely Dominion Energy and Westlake Petrochemical. NACB, as the training business is known, is a leading name in lift training within the petroleum industry, and it conducts some 400-plus safety training programs around the globe each year. Probility Media has attracted attention from Wall Street traders thanks to its impressive share price performance in 2021 to date, over which time the stock has risen by 6,000%. Over the last quarter and last month, the shares have added 916% and 165.20% respectively. In recent sessions, the stock has regularly traded several hundred million shares, and on August 18th, the volume traded in Probility Media reached 521.80 million shares. No wonder that institutional investors are looking into the company. Trackstar IQ, our proprietary search tracking database, has identified no less than 119 searches for Probility Media in the first 3 weeks of August alone. Those searches were made by 71 individual Wall Street pros. It's unclear if the company will fulfill its potential in training, education, and expand its market share reach. And the high turnover in the stock suggests that investors are happy to trade this one rather than adopt a buy and hold strategy. That implies that the gains made so far this year should be considered speculative. However, if Probility Media can put some meat on the bones over the next 6 to 12 months, then we could just be getting started. And that, no doubt, is what's piqued interest in the company among the pros on the street. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up for our free newsletter at investingchannel.com/Trackstar.